Maverick Traders. This is the trading room. We just got done with August monthly expiration. This is Rob Reinhold. I'm joined by Darren Fisher. We will be closing the books up for August, doing distributions and payouts next week, and then we are looking forward to September. In this session, we are going to be going through what happened this week, take a look at the markets, big changes this week in the market technically. We will definitely be updating our score. We have slipped now into bearish conditions on a technical basis. And as always, we're going to be looking in the strongest and weakest sectors for good trade setups.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's start off with last week's news because we had a bunch of news. We saw the markets break. Now, we called last week that the markets were going to break support in the 50-day moving average, and the only question was it going to break a pierce and then recover very quickly, or was it going to break and stay down? Well, we now know the answer to that question. It broke and it stayed down. There was a bullish candle on Friday. We'll talk about that, but the markets have broken down technically. We got weak Chinese data that really put the pressure on the market. There was Chinese data on Tuesday night where industrial production retail sales were much lower than expected, and a property developer missed a bond payment, and it really freaked people out. So the Bank of China actually cut interest rates by 0.15% to try to shore up the market and shore up the confidence, but that did not help. Really, again, we've had downgrades on the U.S. debt, we've had downgrades on banks, and we've got this China news. It's definitely putting some pressure on the market. With all that being said, the Atlanta Fed, they upped their third quarter GDP estimates to 5.8%. Okay, this is where the markets are awesome because we have absolute disastrous numbers out of China. Terrible, terrible news. And then we get this amazing news that our GDP is going to be up 6% this quarter. Darren, what can you make of it? Can anyone make anything of it?
No, I mean, we're back in that same situation of we don't know what's going on. I mean, take a look at the massive miss to the downside on the Empire State Manufacturing, and then you have a massive miss to the upside in Philly. So there's nothing consistent right now that the Fed can base its policy on. If the best economists that are working these numbers are missing this badly, you've got to ask yourself, really, what do we know? I think we talked about this before. I mean, the market has been, the past few weeks, it's been setting itself up for a black swan event. Now, I'm with you. I don't see anything on our horizon that says we should be entering a bear market. Okay, there's nothing out there that says that to me. But when you've got people that are selling for no apparent reason, okay, there's no apparent reason. There's no contagion that we can see, that we can touch, that we can feel. Then we got people that are selling that much, and they're selling very very hard. You've got to ask yourself, what is the unknown? This is the perfect. It's the market is looking for an excuse to go down, and any sneeze that happens, I think could put it down. I mean, this to me is more than profit taking. We'd called for profit taking after the 4th of July. We got that, but we're well beyond that point right now. I mean, I look at Friday's candle, I look at today's candle, and I say, this does not look like genuine buying. This looks like short covering. And I think that, the question is, do we go sideways or down? Me personally, I think it's down. And I think the Atlanta Fed is going to have to revise those numbers. I mean, that to me, it could be an outlier. I mean, but you look at what they're getting right, look at what they're getting wrong, look at where they're missing. We're in the position of we don't know. We don't know what's going on.
Well, take a look at what the bond market thinks. The bond market thinks that rates are going higher. We talked last week and said, look, if bond yields break out above 4.2%, it's going to put more pressure on the market. We got all the way up to 4.3%. So we are at, more than a 1-year high on bonds. The bond market definitely thinks that rates are going higher, putting pressure on stocks. So if you think about where we were 2 months ago, everyone was pessimistic. And then news started coming out where it's like, oh, it's better than expected. It's better. Everything's better than we expected. And then we built up these big expectations. And now we're getting a little dose of reality of, hey, it's not as good as we expected. Remember, the market is a discounting mechanism for the future. If the market thinks the future is getting better, it's going to go up. If it thinks the future is going to be worse, it's going to go down. And right here, right now, the market is kind of saying, hey, you know what? Maybe things in 6 to 9 months aren't going to be as good as we thought. Let's take a look at some of the trades last week. Right, this is a trade in the real estate sector, PLD, and we did a calendar spread on this one. So 125 was the middle of the calendar spread, and on Friday morning, it looked pretty dreadful. By the end of the day, it had recovered. I closed this position out for a very, very, very small loss. So it did move out of our profitability cone just a little bit. So this one was a very small loss on a sideways trade. Next up, we had a short on NCLH, which is Norwegian Cruise Line. It fell about 6% this week. We had a 17-18 bear call spread. We got 1 week left on it. On our verticals, we just hold till expiration. So as long as this doesn't bounce up, this is going to be a nice max gain. Next up in the energy sector, we really like the energy sector. This is NOV. And you can see it was basically down a touch this week. We had a diagonal call spread, a 1921 diagonal call spread. So this one still ended up in the profit area, just slightly profitable by the end of this week. I'm holding this one on for at least another week on NOV. And another diagonal call spread on MET. And you can see we had this pullback, we had this nice bounce, and then we got the China news and it went down, but had a decent candle on Friday. So this diagonal call spread is not profitable, but it hasn't broken down yet technically. So while MET was down 2% this week, it's just a little bit out of our profit window on our diagonal. So let's take a look at where the market ended up for the week. If we take a look at the market performance, we have the Dow down 2.2%, S&P down 2%, NASDAQ down 2.2%, Russell getting clobbered down 3.25%. Oil had a big pullback, and gold. Now again, oil had a big pullback, but when we take a look at the energy sector, you're going to see that the energy sector still held up the best of anything this week. Let's take a look at charts. That big red line is the support level we were talking about. We said, hey, we think we're going to break through this and we could either pierce and then quickly recover, or it's going to not have any recovery. As you can see, we got our answer. Thursday's candle, no recovery whatsoever. Friday, we had a gap down. We did have more buyers and sellers on Friday. Now look, this candle is telling me that, okay, we just spent a lot of energy dropping in 3 days. Got a little exhausted. The sellers ran out of gas. And as Darren said, I think it was mostly short covering coming in on Friday for the weekend. We also had a monthly option exercision, which sometimes will make some short-term abnormalities. So let's talk about where we are here. It's clearly that we have broken through support. It is clear that this uptrend that we've been in for the last couple months, it is clear that the uptrend is over. Okay, that is done. Technically speaking, the uptrend is over. Now, what it means at this point, we just have to ask the question, okay, well, where is the next market trend going to be? Is it going to be a move lower, or is it going to be sideways? Darren thinks it's going to be lower. I think we're in for a sideways market. I think the U.S. economy is still doing well enough to hold up prices, but I think you really have to just shut the lid on that last bull market. It was a nice bull run. I know a lot of our traders did really good in June and July. Okay, that bull run is over. We're going to have to wait for a new bull run to start, and it doesn't look like it's starting anytime soon on these charts. And if you take a look at the technical damage done on the NASDAQ, it's even worse. I mean, we are now dropping below these certain levels here. It's just, we are dropping through support levels like they're not even there. Yes, we could have a little bounce back, but I think a little bounce back is going to be met with some overhead resistance on both the S&P and the Qs. That being said, I still don't see a big reason for there to be 5-10% down move from here. It could happen, but I think it's a little early technically to call that. We don't have any proof other than the uptrend is over. That's all we have at this point. Here's the bond market, and this really, I think, is the key to this market. If these bonds stay up at here at 4.3 or move higher, the stock market is going to feel that pain. So if the bond market goes higher, I think the stock market goes lower. If the bonds chill out, I think the market chills out and goes nowhere. If for some reason the bonds pull back substantially, that could put some buying into the market. I think that this is, I don't know how to use this saying, so I know you do. Is this the tail wagging the dog? Or would it the markets be the tail wagging the dog?
No, I mean, the bond market's bigger, but I think it's pretty apt description that the bond markets are wagging, the bond markets being the tail wagging the dog of the equity markets. I think that's a good analogy to use.
Yeah, I think this is the key. I think the key to this market is the bond markets, and I've got that right here on this week's events. I think that is where the market's going to go. So let's talk about seasonality patterns. The seasonality pattern of September 1st through October 15th is the worst 6 weeks of the year. Over the last 2 weeks, we have been pounding the table in August, saying beware, beware, beware to all of our traders. Lighten up on your bulls. Let's start to get bearish. Both years, we have nailed it. And last year, Darren, I want to say October 15th was the bottom of the market. I think we absolutely nailed it.
I think you're right. I think we nailed it right to the day as far as last year went.
So here's a question. Are we going to get the same thing this year? Now, look, seasonality patterns mean that it happens a majority of the time. It doesn't happen all the time. It doesn't even happen 90% of the time. It happens like 60% of the time, 70% of the time. I kind of think that we're getting the selling early that we usually experience in September. So I think that we're pulling forward what we typically get in September. Darren, what's your opinion about that?
It's a good case. I'm actually going to take the opposite side of that, though. I think the selling continues into September, and for no foreseeable reason, I think a reason will be adopted by the markets to explain why it's going down. But I think we're going to get more selling into September. Just a gut feeling that I have. It's worth absolutely nothing, but that's what, when I'm reading the charts, that's what it's telling me.
Look, when the charts break down below certain lows, I will join you in your gut feeling. But again, that's what we always say. This is cocktail talk. The real proof is in the charts. And look, you have to admit that the bull market run is over. That's done. It's a fact. The charts have confirmed it. Now, what do we go from here? No one knows. But what we do know is you have to say the bull market run has officially ended. That's what we know at the moment. All right, let's take a look at the calendar. Really, there's only one thing this week, and that is the Jackson Hole Symposium. For those of you that don't know what this is, all of the central bankers from around the world go to Jackson Hole, Wyoming, and they give speeches. They've been doing this for 40 years. No one has cared until 2011 when Ben Bernanke used this podium to introduce new monetary policy, and the market was surprised. It freaked out, and now every single Jackson Hole Symposium, everyone's now watching because the central bank presidents are using this podium to announce new monetary policy. So that is going to be Friday. Chairman Powell speaks at 10:05 a.m. on Friday. So let's update our scoring systems. We are at a -2. This is not opinion. This is completely technically driven. We are below the 20 MA. We are below the 50 MA. But the 20-50 slope, the slope of both of these is not going lower. So that is going to be a 0. This is where we are. We're at a -2. What happens this week? Look, we had that candle. We had that candle on Friday. I think it leads to a little bit more, but I think any rally is sold into. I don't think we get all the way up to this resistance level. I think, Darren, you called the highest bounce we get is Thursday's open. I can agree with that. I think you definitely want to be taking shorts into this bear rally if we get it. If not, again, the market is telling you it is more bearish than bullish. There is no arguing about that. Let's get into the sectors, and Darren, you're going to show everyone we had some real damage on the sectors on the charts as well. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
Yeah, I was thinking about this, and the last time I saw this much technical damage done in a single week was March of 2000. Now, March of 2000 was much worse, but this week here had so much technical damage done. That's the only thing that I can even compare it to. Taking a look at the sectors, every one of them was negative. Okay, you got consumer, led the pack, down -4%. You got communication services and real estate, both down 3%. Industrials and financials, on their heels, and even materials on their heels at -2.5%. Now, and even the best performing sector was actually tech. That was still down, 1.125. So everything was sold. There's no reason in the headlines behind it. Everything was getting sold. Now let's take a look at the individual. All right, last week I was at a -2. I'm now at a -3 on utilities here. We broke below support. It looks like it's just in this low base right now, and it looks like it wants to keep going. You have the cross of the 20 below the 50 right there. That's your -3 right there. There's a lot of damage being done. I think if rates do continue to go up, the utilities just keep getting absolutely hammered here. So this is where I'd be looking for a lot of shorts. Now they may just base here for a while. That's fine. We had our move lower on Tuesday and just hung out there right about the 63 level. But what the chart is telling me is anything negative is going to send this market even lower. Looking at communication services, this is when it went from a +1 to a -2 in a single week. And you can see we gapped down today, and we recovered a little bit of had a little bit of a green candle right there. Not much of one, but we're still down over 0.5% for the day. And that was when the market really tried to get some sort of generate some sort of bullishness, and they just couldn't do it. So communication services had a lot of damage done. Looking at real estate, it was a -2 last week, still to -2 right here. Give me one more week with that 20 below the 50. Just happened on Thursday. Then I can go to a -3. The other issue is we're at July support right now. We'll see if we bounce or base right here, but this is definitely a -2 situation. Industrials actually held up pretty good. They went from a 0 to a -1. And when you have this much movement, this is one of the things that I was not going to say grappling with. I've done this long enough that I just do it. You almost have to look how far below the 50 is something. It's bearish, but if you're not quite, if you're just a little bit below the 50, it's a -1. If you're way below the 50, it becomes a -2, a -3, and that's something that you have to just take into consideration how much damage was actually done. And you look at this chart, industrials actually held up fairly decently, for this week. So that's what I'm looking at right now. Looking at healthcare, this one held up pretty good as well. And it went from +1 to a 0, just stuck in between the 50 and the 20 right now. This looks like it's putting in a range right here, a little bit of an ascending triangle. Depends on how you want to do. You could say we're at an ascending triangle at the bottom, or you could say we're just in a range between 132 and 136, and we'll see if we bounce up from there. So if you're looking for something sideways to slightly bullish, I think healthcare would be where you want to look at it. But again, tread very, very carefully here because this could fall down below that 50 fairly easily. Looking at financials, again, this held up pretty good like industrials did, just went from a 0 to a -1. We've got a little bit, we're kind of at support. It's set back there in June and July right there. So if anything's going to bounce, I would say financials is the largest opportunity to bounce. But again, let's wait and give it a couple of days next week, and we'll see which way it goes. Looking at consumer, a lot of technical damage here. This went from a 0 to a -2 in very, very short order right here. Tuesday, Wednesday, Thursday all broke down. Couldn't regain anything on Friday. It was still down a quarter percent on Friday, even with a green candle. So I'm just going to give it another couple weeks. This is one that's enjoyed a lot of gains. And you look back there, I'm looking back at my notes. We had several weeks, many weeks that we were +2, +3 in consumer right there. And this looks like it's going beyond profit taking. So I think this could, if it turns over, I think consumer is one of the ones that leads the charge to the downside. Looking at tech, went from a -2 to a -2. It's still not looking good. We just barely on Thursday had that 20 cross to 50. Give me a little bit more time on that one. This could rapidly become a -3. Not a lot of support. Get down to the 157 area. It looks like that's where the next support's going to be. Cut right back there. So if this does not catch a bid in the next week or two, we've got another, good 5% to the downside on tech if we don't catch a bid. Looking at materials, from a 0 to a -2, kind of a volatile. Materials has been an interesting sector for this year. It has been volatile. You go back and looking back at my notes, and you have periods of, hey, we were at +1, +2, and then we go to 0, and then we're at -2, and back to +1, +2. The volatility in the materials has really surprised me right now. But this one, I think you're looking more to the downside right now. And energy is our new best friend. Went from +3 to a +2. If you're looking for anything bullish, I think that you can get a 5-point spread on something. I think you've got to look at energy. That's the only place that that capital is flowing into, and I'm not going to fight the market on that one. Whatever you think of the energy companies, doesn't matter. That's where the money's flowing into. So you can see in the period of just a couple of weeks, we've gone and gotten a pretty bearish positions, everything. Utilities at -3. We've got 5 at a -2. Materials, consumer, technology, real estate, communication services, financials, industrials, even though they're -1, they're looking okay. Healthcare is at a 0. And the only outlier right now is energy at a +2.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
All right, so let's take a look at some potential trades. Right now, we're looking at communication services. We're looking at Paramount, and this just broke down. This broke through support that was established in June. And you can see it was good support for a long while. We touched it in July, touched it again in August a couple times. And then Thursday, we said, nope, that's the end of that one. So, this one, I think 14 is your next logical place to look. So go out to September 1st, give yourself a couple of weeks, do that, just a simple 14, 15 bear call spread right there. And I think that's the play you get. This one's got enough you're going to get a little bit of theta and you're going to get a little bit of delta in both of them. So this is where I'd want to be in something like this. And healthcare, we're looking at Beatrice, VTRS, nice high base. And you look at a stock like this with all the volatility we've had, and they didn't get the memo, and that's good to see. So you want to go out there, probably just do something simple, just a quick 11, 12 bulk call spread out there. I think we're in a nice high base. Go out to September 15th though. You want to give this one a little bit of time because it might be basing for a while, and that'll give it some time to break through the upper end of that resistance and get up there. Take a look at the scaling. You don't want to do much more than dollar strikes on this one.
All right, let's take a look at industrials. And Darren, I agree with everything you said about industrials. Yeah, they went down, but they held in pretty nicely. So look, I can't be bullish. This sector is at a -1, so it's very hard to be bullish on this one. So I wanted to look for a sideways one and found Fastenal here. So the big question is, okay, where's the range? How do we want to play this? And you can see that we've got resistance up here right around 60. We got support maybe down here around the 55.50 area. I like this one as a true sideways play. 57.50 is the middle of my butterfly. So I'm just going $5 strikes, and I'm going right here. This is a true sideways play, all theta, and we're just going to let this decay. It only has monthlies, so you got to go out to September 15th in order to play Fastenal. Right, next up in technology. I talked about this one on my Thursday end of day video and said, hey, look, this one is breaking down. I'm ready to go short. And you can see it is performing nicely. So the question is there still some money to be had in it? And that is the question here. So if you take a look, what is the play? This one is a quite bearish bear call spread. So the stock right now is at $17.43. And we're saying we think this thing loses $2.50. When you take a look at that, as far as a return, we're saying we think this thing has a 15-20% downside from here. So that's what we're going to play here. We're going to go out to September 15th, give us enough time. And if we do get that sell-off in September, the Darren thinks this is going to be a very nice gainer with this much delta.
Look at materials here. And we're just going to say, CF Industries, some of that is CF. And this just had a very nice pullback. It based for a while. It held in while the market was just starting to fall apart. This week, you had a little bit of a selling pressure in here. If you had to technically rate this, I would say it would be a 0. But look at that candle on Friday. You got a bullish engulfing candle when the market had gapped down. So there's definitely money flowing in here. And I really like that one. So how do you want to play this? This is one I want to play with a diagonal. Okay, so go out to September monthlies, go along the 75s, and then next Friday's 80s. Short the 80s against them. We're just saying, hey, just give me $1 in a week, and that's all I want. And if we can get up there, I think it's going to be looking good. Then I would be looking to probably verticalize it if I held on to the calls from there on out. But this one is looking good. I mean, you could run diagonals on this one for the next 4 weeks if you wanted to. This is one that's held up there. I think that any type of stability that comes into the market, I think CF Industries gets rewarded.
Yeah, I like that trade quite a bit, Darren. Right, let's finish this off with a play in the energy sector. I am quite long energy. I want to get more long, but I have to stay within my rules of not getting too long in any one sector. So here is Apache Energy. It looks great, but I'm going to be doing a diagonal call spread to where I'm getting more theta than I'm going to get delta. So it's right at $45. I'm going to look at this $45 call option for next Friday. And I'm going to be diagonal here. So I'm going to buy the September 8th 42 call, sell next Friday's 45 diagonal call spread. I'm adding in some theta into my energy exposure to where if this thing does take off, I'm not going to make a ton of money. But if it hangs out in here, I'm going to make some good money just from some theta decay. While my other energy stocks are more bullish, they might actually bleed some theta away. So I'm just trying to tamp down some of my theta exposure in my energy holdings. That is it for the trades we want to share with you. Of course, we always want our traders to share their trades with others. So Mavericks, you guys know where to go. Go to the website, log in, go to the forum, and let's share trading ideas with the rest of the firm. Let's go ahead and wrap this up. There is too much technical damage to stay bullish. Now, look, I don't think I need to talk anyone out of being bullish. If you're still bullish, then I don't know what to do. Look, we talk about all these things happening. That's cocktail talk. The chart has confirmed it. The chart has not confirmed that we are in a downtrend yet. We could be starting one. This could be the start of one, but we don't know yet. We could be in a sideways trend. We don't know that yet. There's a lot of things we don't know, but there is one thing we do know. The technical run that we had that started in the Qs in March is over. That's over. And it started in the SPY in mid-May. That move is over, and we know how markets move. There's waves. There's waves that come into the market, and then there's waves that come out. And look, this is just one of those natural waves. And as a trader, we're always trying to match these waves. So we rode the wave higher, and we have made some good money in June and July. And now this wave has changed, and now we're saying, hey, it's likely either sideways or down. We don't know which one yet. We don't have to rush into this next wave. We just can play it. And it's going to play out over the next couple of weeks, months, years, whatever it is. And then the next wave is going to do something different. That's trading. You've got to just have that in your mind, that bull markets end all the time. Bear markets end all the time. We just got to flow with it. All right. Well, that is it for us. Thank you very much. Have a great weekend. Goodbye, everyone.
Good trade, everyone.